Hello, my name is Mark Clare. I'm the founder and CEO of ValueCruncher. At ValueCruncher, we provide online interactive analyst reports, equity research. ValueCruncher currently covers 745 companies, encompassing the S&P 500, TSX Composite in Canada, ASX 200 in Australia, FTSE 350 in the UK, and NZX 50 in New Zealand. ValueCruncher covers 370 of the S&P 500 companies. The interactive analyst reports I'm going to show you today were launched in March 2009. ValueCruncher's audience is retail investors looking for guidance and advice and analysis for publicly listed companies. The demo I'll talk you through today is a brief overview of the functionality that's available for the 745 companies that we cover. ValueCruncher is a New Zealand-based company. Directing up at the screen, ValueCruncher allows people to find companies by either searching or by using multiple different browse paths. Today, we're going to look at Microsoft as our sample company, just to show you what the functionality looks like. Starting right up at the top left-hand corner, ValueCruncher provides a valuation, a current valuation of Microsoft based on a discounted cash flow or DCF valuation. This is the valuation completed by ValueCruncher. As we move across, ValueCruncher also provides a buy or sell recommendation. This is simply based on whether the current share price is above, the valuation created by ValueCruncher is above or below the current share price. In this example with Microsoft, we're saying Microsoft is worth 13% more than what the current share price is, so we have it as a buy. Further over, we have a margin of safety function. This allows people to create a margin of safety in their analysis. For example, I may believe that, or may want a margin of safety of 15% in all the analysis that I put into place. So unless a company is undervalued by at least 15%, I'm not interested in it. So if we move the margin up to 15%, what happens there is now Microsoft, at 13% above the current share price, is now within my margin of safety. The bar at the top changes to blue. This valuation, the ValueCruncher valuation, is interactive, as I said. We use a discounted cash flow valuation methodology from standard corporate finance. The DCF we use is a standard one. We are not using a new method of valuing companies. As we move down, using Microsoft as an example here, the inputs for the ValueCruncher DCF are driven by consensus analyst estimates plus ValueCruncher generated numbers. For example, using the Microsoft example, we've used 65 billion as the rounded consensus analyst estimate in 2011 for their revenues. I may believe, under an assumption, that is too low, and we move that up to 70 billion. What that does to the share price up the top, is to raise the ValueCruncher valuation for it to $25.38. Now, ValueCruncher is saying that the valuation for the business, or on this modified valuation, is 21% above the current share price. This is above my 15% margin of safety that I set, so now ValueCruncher is stating it as a buy. ValueCruncher allows users to modify not just the revenues, but also the profitability, capital expenditure, depreciation, and other key components of the DCF calculation. ValueCruncher then, in the background, creates and takes the key numbers and calculates key numbers like net debt and takes the number of shares outstanding to create the share price. The modified valuations, like I've just done for Microsoft, can then be saved and shared with others around the place. ValueCruncher, down the bottom here, also completes comparison company analysis, taking Microsoft and a group of peer companies using market-based metrics to provide additional valuation information. There's a lot we'd like to do with this table. Further down, ValueCruncher takes into account and displays sensitivity numbers around the DCF valuation. We also have a range of saved valuations for a number of users. Further down, we have details on the calculation. Those are the information that we've got for each of the 745 companies that we've got that we are currently covering. So that's what we've got on our site. Some of the other stuff that we're doing as well. The New Zealand Stock Exchange is one of our key partnerships. New Zealand Stock Exchange is about to put up links to our valuations on their website. These valuations will be up in the next week or so. What is happening in New Zealand is we've had a dramatic reduction in the amount of equity research available, and what's happening and what is driving this relationship is the ability for ValueCruncher to provide low-cost valuations for these companies in a low-cost model. ValueCruncher also has built the platform with a view to being able for brokers to white label the product that they've got at the moment. So ValueCruncher can provide a white labeled solution for brokers with additional functionality, including buttons for trade now functionality and things like that. ValueCruncher provides the tools that corporate finance professionals use to value companies. We make that available to a wider audience, and that's what we do. Thank you very much.